Hey, what's up, guys? It is the 24th of May. We're going to do our little trade journal video thing for the day. You can see the profit and loss on the screen. I'm actually confused why it's showing this number. I did take something like $2,000 in losses yesterday, but that it's showing like $2,800 yesterday, which doesn't make any sense. And then when I look at TradeStation, it says I'm down 1,000 today, which doesn't make any sense. So it's once again something to do with how futures contracts are actually figured. Like there's times that I've seen my position will have moved, right? Like which this one is actually correct, but there's times where like I'll get a type 1 and then it'll tell me that I like got in down here or something weird like that. I don't fully understand how these positions are being calculated. Something about the profit and loss doesn't make sense to me. The last time I tried to ask a TradeStation representative about it, I was like, "Hey, is there any documentation about how these futures contracts are determined, like what the cost base is, how that's all determined?" And he just said, no, there is no documentation. And like that was it. And I had asked him like another question, and he just was like very short, not helpful answers. So yeah. So we're gonna talk about the trades that I took yesterday. Talk about what went wrong yesterday. How did I take $2,000 of losses? What I would do differently if I were to go back, which I kind of am right now with the trades that I'm in right now. Um, I'm not as confident about these trades. This whole thing was kind of a mess, but we're gonna talk about it. So I had gotten into a type 1 and type 2 short. Let's go ahead and um, let's do the little bar replay thing. That'll be helpful. We're on the hourly charts, so right around here, I got in short. That is Sunday evening. I looked at the charts. I got the alert that we were getting near a zone, and I was like, all right, I don't want to wait. I've missed the type 1 here before, and so I wanted to get in short, and so I ended up getting in short somewhere around here, and I put my stop right about here. And the reason that I put my stop right here is because let's zoom in on this price action real quick. We've had this wick was historically where I had been basing my stop, so my stop loss, we'll put a little red line up here just for the sake of illustration. My stop loss had historically been up here, and that was the time that I tried shorting this zone. We tagged out, we got back in type 1 long, spent a whole day bouncing around before we finally pushed up, took profit, shorted or should have shorted this zone, and then fought with it. And that was when I made my decision to stop watching Don's live streams until I get my mind wrapped around my own trading. So that was kind of the play from last week. I took the type 1, type 2, tagged out. And so I looked at this zone and I said, all right, these wicks right here, if we don't reject straight out of that, then it's probably time to say, all right, enough is enough. I'm taking a loss on this trade, and then I'll look to get in long. So I moved my stop essentially down to here. Hindsight is 2020 on this. I have to fully admit this is all hindsight. I wanted my stop right there because I wanted a heavier position to try to make money faster. I got a little bit greedy. Looking at this now, even just like on 4-hour candles, where are we at? 4-hour candles, this wick still makes the most sense for me to have a stop. It's like the clearest sign of rejection that we could get out of this zone. So what ended up happening, let's go back to our hourly candles. We pulled back a little bit overnight. I would have actually been fine having a type 1 entry set, like a limit order set. So that's kind of mistake number one, is I got into a trade way too early. And I had a really tight stop on it. So we got our rejection. I had my limit order set. We ended up pushing up later in the day and tagged that type 2. So that's about 10 o'clock in the morning. Tag that type 2. This wick is actually inaccurate. So let me adjust my position just a little bit. I almost got tagged out on that wick. Almost got tagged out. I actually saw this move play out. I was looking at it. That move right there, I had the alert. I grabbed the type 2, and then I got the alert that we were leaving the zone. And I was watching the charts when it was down here, and I actually thought about locking in the trade. Could have locked in $1,000 profit, but I was like, no, I need to let this thing play out. I need to not. I did not like this price action, right? I did not like how we came down hard. I was looking for a retest and then a continuation of a downtrend somewhere down to here. I will fully admit though that on like a weekly basis, we're a little bit overextended. It looks like we need to see something of an up move maybe for a week or two. We've been saying that for a couple of weeks now, so it wouldn't surprise me if it happens, but I just need to play the zones as they stand, let the trades play out. So ended up getting in short, did not lock anything in right there. My cost basis would have been right around here at this time. I was at this point short 12 contracts, risking $500 per trade, and so it was moving at $60 a point. So from even just from the end of the zone to here, that's 22 points. 22 times 60, that's a $1,300 move from point A to point B right there. Like this, I was in it pretty heavy because of how tight my stop was. And what ended up happening was that it right there? I don't think that one tagged me out. It was that one right there. So right after market close, basically, this down here at the bottom of the screen, it says 1500 hours. That's the time that the candle starts. This I ended up tagging out. Yeah, right on the tip of that. So once again, hindsight is 2020. I tried playing it a little bit tighter to get a little bit more aggressive. I should have had my stop up here. No two ways about it. Should have had my stop here. So would have had my type 1 right around there, which would have put me in a move like this, which is still, I would say, kind of a possible move. And then the type 2, I would have gotten in right about there. Had my stop right there. Still could have grabbed 5 contracts, and it would be a 3-to-1 risk to reward ratio. What I ended up doing then was going long. So this is what I should have done. This is how my position should have played out. I ended up setting my limit orders to go long as soon as I tagged out. So I had a type 1 with a stop right here, and you can see where this is going. And then I had a type 2 right about there with a stop right around there, just below where we peaked out on the day, thinking that we were not going to come any lower than that. And so there was my 3-to-1 trade. And of course, we came down through and tagged clean out of that. From what I heard, this is based on Snapchat earnings. I actually have not looked at that chart at all. Is this today? 24th at 1700. Yeah, this is today. So Snapchat had bad earnings. We sold off. We bounced around. We sold off some more, which makes me think that the Nasdaq's still pushing up. So anyways, that's where we are now. You can see I tagged out of my long positions. And so I did end up getting back in short on this candle right here. You can see my cost basis is now here, which is where I tagged out of my long positions. It's kind of what makes me wonder if that's how these things are getting adjusted. I was in the green for much of today. I like that we made this lower low on a shorter time frame. We're looking at the hourly. I don't like how strongly we rejected off of that. So if I want this thing to play out short, you can see my stop is all the way up here now. I do have a limit order set for the type 2. I'm hoping we get one more curl over. If not, I'm going to take a loss and go long. So off to a little bit of a rocky start this week. Definitely not... like it kind of sucks looking back at it in hindsight and being like, oh wow, this trade right here, this 3-to-1, had I gone short, type 2 right around here with a stop right about here, 3-to-1 risk to reward, I would have hit profit today, and I would have had 5 contracts, and that'd be about a $1,400 profit. So instead, I'm down $2,000 total from losing on the shorts and then losing on the longs all at once. So this brings in a really interesting concept about what can go wrong with this system that I'm putting together, and that is not having my stop at the right place, because my stop is really determining where I admit that I'm wrong and it's time to switch the other direction. So my stop loss serves 2 purposes. Well, it serves 3 purposes. One is to stop the loss, right? I position myself to say, when we hit this point, I'm admitting that I'm wrong, I'm limiting the amount of risk that I have on the table by cutting my position, and I'm looking for the opportunity to flip and go the other direction. And in this instance, it was not time to do that. Now, once again, it's really difficult to say all of this now because hindsight is 2020. I can look at this and say, okay, I should have my stop above this wick. That's what I had been doing. It would have worked out fine. Okay, that's all well and good. Um, but the zone, this type 2, based on this price action right here, still makes sense. We could extend it maybe a little bit and do something like this. Like we'll make the zone a little bit wider. Um, but realistically speaking, like I think what I did is I was looking at the hourly chart when I figured out where I wanted my stop loss, and I said if we break above this, then I'm out. Fine. I should have stuck with a longer wick. That's a clearer sign of rejection. It's a clearer sign of where the zone actually is. And then if you do look at more recent price action in history on this, um, and especially just so you understand what I'm looking at when I say all this, I really like how this one candle right here, this like reversal looking candle, we tried to push up through the zone and we got shot right back down. That's just an excellent way of saying this is where the sellers are hanging out. None shall pass right here. Not to mention this area forms a really unique point when we zoom out a little bit more, which I'm going to draw a line on there. It's not going to do me any good because you're not going to be able to see it on top of all the other lines. Let's make it bright yellow, see if that helps. And make it like 4 points thick. So you can see this area right here has been a really important area. We break above, we go long off of this. It's almost like a point of structure in of itself. I'm still comfortable calling this the actual zone because we don't have any clear sellers coming into play outside of this one wick. And you can see we never actually tested it there. So it's not quite a zone. There's definitely something going on right there, though. It's definitely something worth looking at, but to me, that's a more clear indication of where my stop loss should be. So as you can see, I'm just rocking out a red position right now, down about $200 on it, waiting to see what tomorrow holds. This push up makes it look not super good for me, honestly. So it might end up, this week might just be a pretty red week. So it is what it is. Once again, a lot of this is hindsight is 2020. I wish that I had a more clear answer, just looking back on it and being like, oh, like that's what went wrong. But I was playing a tighter position, and that tighter position ended up hurting me both ways, which is the risk of futures trading. Don has talked about this before. If you're trading a system where you can flip in and out, you can go long, go short real fast, there's a chance that you get burned both directions. In my case, that's exactly what happened. So I'll just keep trading the system for the rest of the week. If we get a break and a retest above this, like we have here, I'm expecting a push up. And honestly, if we get that push up, if we break above this zone, I kind of feel like we'll see some price action similar to this, where we come up, hit the zone, pull back, and then I would actually look for a continuation to the upside. Just based on what I'm seeing right here, based on this consolidation, based on the way that the weekly charts are looking, I think if we break above this zone, I kind of feel that we're going to crawl our way up, break above this zone, hopefully retest, and this zone right here I think would be a better short entry. If we hit this zone, I kind of want to just buy a SPY put 60 days out and let that roll. Just thinking that that's going to be where we're going to see possibly the next leg down. In the meantime, I'll just trade futures between the zones like I have been. It should work out just fine. But so there you go. Starting off the week a little bit red. It's my luck that I would increase my risk right before taking 4 losses back to back, and here hopefully that doesn't turn into 6 losses back to back. But it's a learning experience, right? It's fine. I'm not risking money that I can't afford to lose, so I'm just going to keep doing what I'm doing, keep playing the system, and keep letting my winners run, keep letting the math play itself out, and should come out just fine on the other side of it. So, if you want to continue following me, make sure you hit the little subscribe button. You can follow me on this trading journey, and I'll see you in the next video.